Hi, everyone, and welcome to the inaugural weekly Venture Scanner Roundtable. I'm Nader Ghaffari, your host and CEO of Venture Scanner. At Venture Scanner, we provide coverage on emerging technology sectors. We do this through an in-house analyst team that is powered by our proprietary technology and data. The format of these weekly roundtables is going to be somewhat informal. It's simply going to be an around the table where we'll go around to each sector analyst who will share one insight that they have gleaned over the last week for discussion. And we're going to keep this to under 10 minutes, and we look forward to your feedback as we will seek to continuously improve this. So without further ado, let's kick this off with Nate Pacer, who covers both the Bitcoin and connected transportation markets.
Hello. Thank you for kicking that over, Nader. So today, the update that I'm going to give is for the Bitcoin market. The major things that happened this week was mostly around the regulatory regime. As we all know, the Bitcoin is oftentimes at loggerheads with the law enforcement agencies, but there's been some recent moves in the U.S. that are pretty positive. The first being that a former director of the U.S. Mint, Mr. Edmund Moy, wrote a blog post that really sort of challenged banks to sort of accept digital currencies and said that banks oftentimes could maybe use a little bit more competition, and Bitcoin and digital currencies are great opportunities to explore that space. So while Mr. Moy is no longer the director of the Mint himself, he kind of has a lot of weight with that community and is really well respected. Furthermore, the state of Massachusetts recently announced that they were going to set up a financial task force to figure out how they would be able to sort of bring Bitcoin into the financial markets there, and now they sort of join a slew of states that are starting to look at Bitcoin seriously: California, New York, Texas. So whereas 6 months ago there was a lot of questions, I think we're getting to the point now where the rules of the road are going to be more defined for Bitcoin players moving forward.
Great. Thanks, Nate. And it seems like these steps that are being taken, Nate, are sort of laying the groundwork for sort of implementing Bitcoin into the mainstream community. Do you see these steps as sort of building the foundation for this to become something that's an everyday thing in our lives?
Yes and no. It's mostly around, I would definitely say that's the long-term goal. I think the first sort of step is to define what's legal and not legal, and then how to treat it for tax purposes. So that's sort of the near term, but once you have that, you more or less have anything you need for mainstream adoption. I think that the mainstream adoption will need to be more of a customer pull rather than like a regulatory allowance. But yeah, for sure, the regulation is a necessary first step in mainstream adoption.
Right. It sort of lays the groundwork. Does anyone have any questions or any other insights to provide on this subject before we keep going around the table? All right, well then let's move over to Devin. Devin covers the digital health market. Over to you, Devin.
Thank you, Nader. Yeah, in terms of digital health, really one thing that I wanted to mention that has happened today here in San Francisco was Samsung's Open Innovation digital health event. So Samsung had an event here at the San Francisco Jazz Center, and basically this event was around building and accelerating a digital health ecosystem, and geared at enlisting and the best and brightest innovators and technologists to help empower individuals to manage their own health and wellness. And basically to do this on top of a foundation that Samsung has built. Those two components being really an open hardware platform. It's a beta product called SimBand. It's focused on sensors that hardware can then be laid on top of. It goes on the wrist and Samsung has helped to develop that. But again, it's very much in beta form. And additionally, there's a open software platform that will help to aggregate data and that'll partner with that hardware component and help to generate insights, which is really the key to drawing conclusions and helping individuals manage their own healthcare, and that is called SAMI. So basically, I think what Samsung is doing is great, and the open innovation strategy is certainly alive and well in digital health, and this event really put the flag on that. And success in digital health requires collaboration across many different parties, and it's not a siloed activity. We've seen this time and time again, and having both the involvement of technology side and the clinical side is key to continuing to unlock the power of what's happening in this digital health movement that we're all a part of. And then additionally, with this movement here and what Samsung is doing, additional resources are available in the form of these open innovation initiatives for entrepreneurs to jump in and continue to make a difference and gain the resources. Samsung has pledged $50 million for this project alone. So there's this piece, and then additionally, playing in conjunction with that, Apple's rumored to have they're developing a health app ecosystem to partner with their health book health app ecosystem, where developers can jump in and develop apps that would then be resourced by Apple as well. So a lot of exciting stuff happening, and I really wanted to mention that. Given
Devin, do we see a trend? Do we see entrepreneurs gravitating towards one or another of these platforms? It seems like the large corporations are definitely want to get the platform so that they can see entrepreneurial activity. Do you see any trends on entrepreneurial activity gravitating to one or another, in the marketplace?
Yeah, so I think it's still too early to say in terms of moving towards these big tech programs such as this open innovation program for Samsung. Really, this has just come out of stealth mode today, and Apple's is still kind of under wraps. I do see a trend, continuing to move that direction, and additionally, I see a number of trends, namely in med tech. There's been some thawing of acquisition type activity for big med tech companies moving towards more clinical grade wearables, which I think is becoming more of an acquisition, more of an exit option for healthcare, for digital health startups.
Right.
So I'm seeing that, but I think it's still too early to say in terms of these big platforms. But I do see. I would suspect that companies will go that way in the future.
Right. Masami, did you have anything to weigh in on this from an Internet of Things perspective and things you're seeing related to healthcare?
Yeah, I've seen a lot of startup movements in digital healthcare area from my IoT scans. I think where gravitation in terms of IoT, I think there's a lot of consumer applications still going on. Like I saw a pretty interesting company this week where in addition to measuring your babies and all that stuff, there's a company that allows you to monitor or look at a food item and scan it to see whether it's emitting any substances to show whether the food is healthy or not. Another thing I saw was Bella Beats is a company that it's like a Fitbit for pregnant ladies. It's in a little device attached to the stomach, and then ladies can monitor their baby's growth. Just secured a $4.5 million round, so that's another exciting consumer item that is getting some traction right now. Right.
Well, let's keep going around the table. Masami, did you have any other insights you wanted to share from the IoT space?
Yes, I think in the area of IoT, there's a lot of movements by the incumbents, the bigger players. So Apple is going to have their WWDC next week, and the big rumor is that they're going to announce a big update on their iOS and their OSs for connected home. There's also a rumor that they're going to do something in the connected health space, and also Google, there's a big rumor that they're going to buy a drop cam. Drop cam is a security camera, the DIY kind of cameras. Fits really well with their past acquisition of Nest, where they can cover their connected home strategy. And also, as Devin mentioned, Samsung has hosted a digital health event. So a lot of big companies are moving into this IoT area, where all the startups have been, cultivating and finding that the magic formula of what works in IoT in the last few years. And a big trend, I think, is connected home, digital health, and a little bit of a car, because Apple announced their CarPlay a little while ago. So I think those three areas are where the big boys, the big incumbents, are moving towards.
Awesome. Does anyone have any thing to add or question on Masami's insights? All right, let's keep going around the table then of our round table. Next stop is Nathan, who covers a number of markets: retail, online, offline, 3D printing, and future of television. Nathan, what are you going to touch on today?
I think we're going to go for 3D printing. It's kind of been some interesting stuff that's happened in the last couple weeks. One of the most notable is Autodesk, one of the largest CAD software providers, actually released an open source platform, or they're going to release an open source platform. And so that caught my eye for a couple reasons, right? One is, look, they're starting to build this community, right? We've seen all this press about how 3D printing and consumers, it's hard to get that shift over to the mass market, right? What are a bunch of people going to do with a bunch of keychains? So I think this is important, right? There's a technical barrier to entry. Autodesk is starting to address it, saying, hey, look, we're putting out this open source software. Anyone can access it. We're going to partner with hardware manufacturers. We're going to get it implemented on multiple machines so we can start streamlining this whole 3D printing process, right? That's one piece of it. I think another piece is that having this open source community will help spur a lot more innovation and growth, right? We've seen this with MakerBot releasing their own marketplace, and we've seen this with other 3D printing guys who are saying, hey, look, we're building this platform for you to really build off of. And so I'm very excited to kind of see where this goes. With it, they're also releasing an open source SLS printer. That's a little bit high of a price point. They're releasing the plans for free to anyone who wants to build it. But I'm kind of just cautiously optimistic at what this will do for the mass consumer market. So I think that was something that should be looked at from anyone just interested in the space.
It appears, Nathan, the 3D printing, a couple years back got all sorts of press and buzz, and then kind of went into the background, and we've seen sort of entrepreneurial activity in that sector slow down a bit. Do you see things like this changing that? And if so, in what categories do you see some of these kinds of activities creating innovation?
Well, to address the first part of your question, I think that we're seeing this start to mature, or it's going to be in the phases of maturity, right? So we saw a lot of press about it because, hey, it's new and exciting. Now let's see what the actual business model innovations are going to be with this technology, right? And so to answer your next question about which areas are going to start to be more attractive or more exciting, I think you're definitely going to see the service sector. Any guys that are starting to look for or that are going to the prosumer markets, right? Those are the guys that are going to be being able to utilize, these $5,000 printers and start seeing some more growth. I think Stratasys just bought Solid Concepts a few weeks ago, and so we're going to start seeing a lot more activity there. Just my opinion, but
great, thanks. Does anyone have anything to weigh in or discuss on this subject? All right, then we're going to make it to our last stop on the roundtable, which is Wayne, and Wayne covers the financial technology sector here at Venture Scanner. Wayne, over to you.
Thanks, Nader. So one piece of news last week was that Future Advisor, a wealth management startup, raised $15.5 million from Canvas and Sequoia being the notable investors. Future Advisor is part of a new crop of fintech startups, essentially aiming to help retail investors manage their money better. And other competitors include Wealthfront and Betterment. what's interesting is that Wealthfront and Betterment also raised about 35 million and 32 million respectively about 2 months ago. So I'm seeing companies in this space raising more funding recently. Now, if you look at, if you read a white paper on what Wealthfront does, Wealthfront, Betterment, and Future Advisor, what these guys do is essentially they adopt a index fund investing approach. So you give them, say $100,000, and they would allocate your funds across a diversified portfolio of index funds and ETFs across different sectors. So if you read a white paper, in terms of the finance theory behind it, it's not particularly, it's not rocket science. In fact, a lot of it can be learned from an undergrad finance course in terms of the Markowitz, modern portfolio theory and the Fama-French models. What's interesting is that, a lot of these wealth management techniques used to be available only to the ultra-rich and high net worth individuals. But what we're seeing is that these startups aim to democratize these kind of technologies for retail investors. Like how Charles Schwab brought, discounted brokerage to the masses for the baby boomer generation. It said that these startups would bring, advanced wealth management techniques to the masses, especially for the millennials who are more, tech oriented. But I think the thing about these kind of startups is that, if you look at when they were founded, Wealthfront and Betterment were founded in 2008. Future Advisor was founded in 2010, and they're experiencing pretty good traction right now. But it's not explosive growth. One reason behind this may be that it's first of all it's very tech focused. If you look at the customers of Wealthfront, it's very a lot of the customers of Wealthfront are Silicon Valley people. People that really believe in technology and the automation that it brings in terms of reinvesting, tax harvesting, and it remains to be seen if it would appeal to the masses that may prefer a human financial advisor who would prefer more hand-holding and the human touch. So right now with Future Advisor raising this round, it's this space is getting pretty interesting.
Yeah, what I find most interesting about it, what most appealing in this space is that it's opened up what used to be a service for the 1% of Americans to essentially all Americans. I think the minimum starting point on something like Wealthfront is just a couple $1,000, right, Wayne? And so it opens up the ability to get the same level of opportunities for your invested capital that others had to turn to high-end wealth advisors in the past to have access to.
Yeah, precisely. I think for Wealthfront, you only get charged the management fee once you invest more than $10,000. In terms of the management fee, it's about 0.25%. For Wealthfront, for Betterment, it's from 0.15 to 0.25%, and for Future Advisors, about 0.5%. If you look at the business model, it definitely is very appealing because a lot of it is automated investing, automated
right.
Rebalancing, and you can really reap the benefits of having a software do all the work and just sit on 0.5 or 0.25% of the individual's net worth.
Well, yeah, I think it's software doing a majority of the work, but you still have the smart analysts in-house over there doing the last mile. They've essentially put software to work in the front end of the process and still leveraging the human capital for the last mile, but doing it so efficiently that they can open this up to the masses.
Yeah, it's interesting.
And at scale, which is incredible.
Yeah, I'm actually curious to see how much of real people, analysts, they actually employ, because in terms of the risk assessment process, it's a questionnaire basically. For Wealthfront, it's a 10-question questionnaire to assess your risk profile. And from the website, it seems like all of it is automated. The rebalancing, reinvesting, all of it is automated. It seems. So
Wayne, do any of these services actually enable you to invest in asset classes that aren't tied to the public markets? Like, do any of them actually take your money and invest it into a venture capital fund?
Right now, it doesn't seem like it. Essentially, the whole benefit of Wealthfront is that you're basically spreading out your assets across multiple stocks and multiple asset classes. So it's very focused on index funds.
But not the private markets.
No, I think for private markets, in general, it seems like it's restricted accredited investors. If you're talking about companies like investing private companies on angel list, so far right now it seems like it's restricted to accredited investors who are generally high net worth individuals and not the masses like what Wealthfront and Future Advisor is trying to target.
Right, because even if they wanted to invest the capital into something like a Sequoia venture fund, they would have to validate that somebody is an accredited investor to do so, which doesn't align with their model of the long tail.
Yeah, that is correct.
Does anyone else want to weigh in on this?
I actually have a question for Devin, if we have time for that.
Yeah, this is a roundtable. Please.
All right. So Devin, actually, I'm curious. You were talking about Samsung's their whole move into digital health. I know that Samsung owns a lot of the house. Maybe not so much here, but in Korea especially, they own the kitchen, they own the living room, they have your phones. Why the push into digital health? What do you think is the main driver for that? Any thoughts?
Yeah, that's a great question, Nathan. I think the fact that they do own all those other components is really the reason why they want to get in here and build the foundation to continue to build and make progress within the digital health space. On top of there are some big trends happening right now. Healthcare costs are increasing dramatically year over year in the world. We have an aging population. Something like 1.2, 1.3 billion people will be 60 plus by the time they're the next 10 years, and then additionally, there's just an increase of chronic illness throughout the world, and all of those provide some strong macro opportunities, within digital health as a whole, and to really carve out digital health as a separate entity, an industry, and then additionally, for Samsung, given their reach into all these other different rooms in the house, as you say, this is just another play in terms of really reaching into the health house and really putting down the foundation for those folks to build upon and for them to continue to own the rooms on that side of things as well. So really, in sum, just a lot of big macro movement in play in terms of health, and Samsung really thinks that in terms of gaining scale and being that that number one player within digital health, that this is the way to do it. And I believe that's how they've tackled a number of other technological focuses in terms of they play in. So to me, I don't know intimately about Samsung, but it seems like it's right in line with their previous strategies.
Cool. Thanks.
Sure.
All right. Well, this brings to an end our inaugural Venture Scanner Weekly Roundtable. Tune in again next week for the next one. In the meantime, you can always visit us at venturescanner.com and take a look at our scans, which provide dynamic coverage of all these sectors, where you'd be able to see the latest companies, the latest curated news, and obviously our own original analyst insights. And if you have any questions, you can always reach me at nader@venturescanner.com. Thank you again, and we'll see you next week.